structure into them so that they can grow and resources and manage that process. But the centralized functions that Troy was working on allow these subsidiaries to scale. So it's a coalesced team effort. They being our visionary and giving us our plan, and Troy and I executing at both angles. It's like a four armed four armed monster, if you will. And bringing in Wanda has really just rounded out our capabilities so that she's keeping a eagle eye on the economics, which that data drives our decisions, and it has to. So it's been methodical growth. We took some time to do some consolidation and build the necessary infrastructure and sophistication to get to that $1 billion market cap, which is our goal, uh, which rolls into the next year. And there's some very promising information that we get to share. Uh, we will see moving into the next fiscal year almost $200 million in project development, pre-construction that are going on at the different subsidiary levels. So, you know, alternative energy, it has a long time cycle before you actually finish projects. Just comes part of the nature of the industry, but it also affords us to keep a consistent pipeline. So we've been growing, scaling this organic ecosystem that Dave created does build new revenue streams within each other. I mean, just right now, real time outside, we were talking about new work that's going to be occurring at the balance level to support the different subsidiaries, which becomes a revenue center for balance. So it's organic and exciting, and really, it's looking into 2022 and everything that we see on the horizon. It's dynamic, and it literally gives me chills just thinking about it. And so it's such a positive.
Excellent. Yes. Great answer. I mean, you do have a lot of stuff going on for you, and the last Q&A we did, a lot of good answers. I believe all three of you were on, right?
Can you hear me?
Yes.
Chris Davenport?
All right. Excellent.
Okay, cool.
All right. Yeah. So moving on from that, let's go back to Chris then, real quick. So,
I don't
Chris,
I don't wanna I don't wanna step on anybody's toes. If you wanna talk some more, I was intrigued listening to this gentleman. It's wonderful to hear about their successes.
that's basically it. We're gonna ask a general wrap up question at the end for all of you, so you can go any
Thanks.
big questions. Um, so yeah, I mean, how do you feel about the past year of business?
For me, well, this year it's been a huge growth year for us. So, for those who don't know about our organization, we're an e-commerce seller and catering to the auto parts industry. We've really transitioned in becoming a technology company, so utilizing technology to drive sales, and that's really software and code. So we have a huge team in India that manages and helps us with all of our code, and it's very robust and it's very significant. So we have two platforms. One is Lift Kits for Less. We've been with Lift Kits for Less in
We've really tried.
2013, about $70 million in total sales there. Last year we did close to 8 million, or a little over 8 million. This year we're up 50% on that platform, and we were really constricted last year with lift kits for less from a technology standpoint. We couldn't scale. We were maxed out. So we invested heavily in new infrastructure and new software, and really are totally have the capacity now to drive as many SKUs onto that platform. And it's really just a numbers game. And with access to parts, we can drive sales. So it's really exciting. We had about 50,000 SKUs last year. I think our current SKU clone is around 300,000.
Yeah, wow.
Much of that is just really came on in the last few months, and our sales have dramatically taken off. In fact, we reported our Black Friday sales, which were significant. We did about close to $1 million over those 4 days, quarter million a day, and that speaks to the infrastructure. So anyway, so yeah, huge year, and we expect that to grow. We continue to partner with large part suppliers now, and we just signed the largest tire distributor in America. We expect that to have a significant impact to our revenue. Um, I don't want to provide guidance, but it should. U.S. domestic tire sales in America is a $34 billion industry, and having the number one tire supplier give us full access to their database and implement all of that through technology API calls and be able to push that stuff live. And orders are done all through technology, order placement, tracking, everything's done through API calls. We don't even have to touch the order. I can't help to be very bullish on what that impact will have to our business. And of course, we launched Auto Parts for Less, which is a true platform technology, multi-seller platform. When you look at platform technologies, these are the largest companies in the US today in the world. Companies like Amazon, clearly, and other large organizations that are platforms that bring consumers and buyers together. So, like Uber and Lyft, Etsy, and so on. So, we've launched the world's first automotive parts multi-seller platform, which is totally contingent on technology. And so, we're very excited about that. It's a huge opportunity, and we're executing. So, yeah, I mean, my head spins every day just with what we have and what we're going. And as I tweeted out, and a few months ago, I went to New York and met with several investment banks and made it very clear our goal is to uplist to the NASDAQ. And although I can't divulge a lot of information around that topic, I think when we look at the For Less group, we're very much aligned with our investors' goals. We are using no dilutive debt because that would not that would directly impact my ownership if and when we were to uplist to the Nasdaq or the New York Stock Exchange. So I don't think there could be a better time for an investor to come on board and come along for this ride. And I hope your listeners out there take a hard look at what we built. Opportunity is because it's I think it's a tremendous opportunity.
Yeah, no, I totally agree. Especially after I know you changed your whole back end and now you got the API calls going on. So that's a huge improvement, right?
Yeah, it's huge. We've gone to the technology that we're using on the back end is it's called serverless. It's not serverless, but it very
Yeah.
much is cutting edge technology, and it's basically using AWS Fargate and S3 and RDS. Those are just fancy terms for something that goes really, really fast with a very limited scale. So it's exciting.
Yep. All right. Yeah.
And the
Well,
reason why
same.
that's important, and just to wrap up, the auto parts industry is unique. Um, the When you look at the amount of SKUs that the typical auto parts seller has, whether it's a Napa, O'Reilly's, or Car ID, Car Parts, Rock Auto, there there's a real challenge there. So these sellers have 200,000 SKUs, and like a Car ID that might have 20 million SKUs. And so that's complex data that has to be instantly updated, whether it's pricing or quantity or descriptions. And so that's very hard to do for most companies. And so it's the entire auto parts industry is really controlled by about 8 companies. Clearly, Amazon, eBay, and Walmart are where everybody's going to buy and sell. And so those companies clearly have the technology to manage that, right? All those API calls simultaneously, instantly, and seamlessly. And then you have other large software companies that serve the entire industry. Companies out there like Epicor, WHI, other large companies like SureDone, Channel Advisor, multiple software companies, technology companies. And so, without naming specifics, we have every single company out there under NDA, and we are working through those integrations. So, our goal for 2022 is to have somewhere between 30 million to 50 million SKUs on Auto Parts for Less, with a robust amount of sellers, which
All right.
means we become the face of the auto parts industry. So
Yeah. I mean, that kind of rolls into the next part of that question. It's just, anything that you want to improve on for next year or any targets you're trying to definitely hit, just anything you're looking to do next year specifically.
well, I mean, our number one goal is to get to a big board, and with that capital raise, we're going to take and invest to drive buyers to the platform so our sellers succeed. We're just laser focused on growth.
All right. Yeah. Excellent. Great answer. All right. So that was Christopher Davenport from the For Less Group. Um, Ricky, are you still on? Or Parsh?
I'm right here.
All right. Yeah. So Parsh is from RGGI. Um, Same question, essentially, Parsh. So, how do you feel about the past year? Anything you could have done differently, or anything that you feel exceptionally proud of? Just any general comments on the past year of business.
Yeah, well, first of all, thanks a lot for hosting this. Appreciate it.
Oh, of course.
Um, the year has been difficult. We are a startup, developing a product and material handling with a range of anywhere from 100 kilograms to 2,000 kilograms. Basically, they're mobile robots. We are concentrating on intra-plant movement of material. So lately, with Industrial 4.0 push, and the fact that out here, at least in the Detroit area, we're coming to the end of the internal combustion engine, basically, ICE, end of the ICE category of development of those engines. Everything is going to EV, and that requires different material handling than what we have used to. So there's quite a bit of turmoil. There's quite a bit of change coming up, and people are rushing to reconfigure their production lines. Where we come into play is we have four products: Pull Buddy, Little Buddy, Atlas, and Botway. The first three products I mentioned are different weight categories and different guidances. At the top end would be Atlas, which would be natural guidance and 2,000 kilograms, and at the lower end is Little Buddy with 100 kilograms, and again, it's naturally guided with lasers and with basically lasers. Um, so we've been introducing this technology, but uh, the challenge comes into play is for a small company, how do you show the whole package? And we just finished up setting up a demonstration area where we have these vehicles running, and you can actually observe them picking up a load and transferring it, and do a line side feed and whatnot. Together with it, the software itself is core Botway, which has the capability to actually trigger an event based on where the vehicle is, and where the load is and what's happening with the load. It can actually trigger other events and other tasks, and that is the key to getting these systems to work heterogeneously. Also, along these lines, we've also developed some other interfaces that can talk to other. We can actually track other AMRs as well, if they desire to be tracked, so that you can better manage the process. Um, that's on the product side and development side, and the show and tell side. Manufacturing has been quite a bit challenging. The supply chain issues yeah, are pretty pretty serious, and we thought that by the end of the year it'd be getting better. Unfortunately, they're not getting worse, but they're not getting better in the sense that you order something, and either it's not the right stuff, the quantity, the quality has changed, and it becomes challenging. Even the price of steel affects us incredibly. What we estimated a year ago is not what we are paying to get things fabricated. That's on one side, and the other one is there are not enough manufacturers out here to be able to who are producing the kind of drives and steering mechanisms we need. So we've had to actually change suppliers to a Hong Kong-based supplier. So those are the challenges. But optimistically looking at it, we are getting a lot of requests for quotations, show and tell, and that basically helps us get a report out, start condensing our story, distilling it to how our products can fill the void of moving material, which some companies do not consider that valuable, which is correct, right? I mean, if you have to pay somebody $30 an hour to move a pallet from point A to B, that's not as highly valuable, in the sense that you're asking them to be operating a machine, or doing some other process-related intricate work. Yeah, so that kind of moving around of material can be done by a stupid, mechanism. And in this case, it is an AMR. It's really not stupid, but it has quite a bit of intelligence to it in terms of arbitrating what path how it's going to sense, what path it takes, and how it delivers the product where it needs to go. So, in a nutshell, that's where we are. Looking forward to just tuning out our process for manufacturing of our own vehicles and setting up the market buzz to be able to go ahead and have people look at us pretty seriously when they're thinking about reconfiguring a production line, and especially when they need to move things, that are about 2,000 kilograms or less. So that's where we are.
Sure. Sure. So it seems like the major hurdle you've had this year is just supply chain based, essentially.
Essentially, that's where we started off. I mean, you can't, customer comes in, you can't tell them, oh, it's going to be 30 some odd weeks before I can deliver your vehicle.
Of
That
course.
makes, that just basically gets them to go somewhere else. And, for you to have it in stock on the shelf, that's quite a feat. But fortunately, everything has come together as of late November, and we're just getting our ducks lined up and getting out to roll at least the first 10 vehicles by end of January, and then hopefully building up a decent healthy inventory of different class of vehicles so that we can supply a complete system, and just not saying, oh yeah, we can do the 2,000 kilograms today and 100 kilograms tomorrow, and then 1,000 kilograms somewhere in between. We want to be able to go ahead and do the entire line, if we can. So
Sure. Sure. Um, so do you have anything you want to improve on for next year specifically?
it is the specifically is to be able to go ahead and knock out our vehicles on a specified time frame without having any other issues related to manufacturing. But just like one of the other people mentioned is training of people and getting the consistency and testing out on a continuous level, and having the vehicle come out perfect at the end of the line. That's it's a feat. There's a lot that goes on, and we need to go ahead and get that honed in. That's where we'd like to be.
Sure. All right. Excellent. All right. So gonna move on to Ricky from Jetter from Star Jets International. Just bear with me for one moment, guys. Just have to give him a call. He's having mic issues. Hold on, just. Alright guys, so we're just having some technical difficulties here, so I'm gonna have Ricky on speaker. Hopefully you can hear his responses. Yeah, I can hear you. Somebody shoot a comment if you can hear him. Cannot. Alright, yeah, so he's just running into some minor issues. We're gonna move on. Troy again. So you had some slides you wanted to present, correct?
Would love to share our screen. Yeah, we've got the deck up and ready.
Alright,
If you
you
can
should
fire
be
it up,
able,
our
yeah, you
shareholders are ready to look at some slides, I think.
yeah, you should be able to share because I changed the permissions. So just try to,
Good. Give me a second here and get us going.
and then I will just change the live stream. So I'll be showing my screen. All right, give me
You know,
one
so you can see the
second.
slide deck.
I am pulling it up now.
How much time do we have?
Ah,
So we know which ones to
that's-
focus on.
All right, so here we go. Whoa, hold on one second. That just jumped. There you are. All right, perfect. Yeah, so I've got your screen up on the live stream, so you're good to go.
All right, I'm going to cue us in and then hand it over to Pablo. Some of our shareholders have seen these slides before. We've updated our investor relations deck for this end of year presentation. And again, thank you for having us. One of the hallmarks of this year has been our amazing revenue growth. And as we come around the corner here on reporting our third quarter earnings, which are due out by the 15th of January, we're really working hard to um, ensure that our audited sales and revenue numbers are accurate and growing. You know, to that end, Pablo's going to hit a couple of things that we're working on at all of our subsidiaries and that we're centralizing into a centralized internal auditing department that we've created and a centralized finance department. I'm showing a corporate overview here, which many of our shareholders are familiar with our $100 million trailing 12-month revenue guidance. Last year our revenue was 17.1 million. So, we forecasted in May of this year, Dave and myself, as Pablo was joining, that by May of 2022, we would be at $100 million TTM. I'm going to hand it over to Pablo to address where we are in relation to that and potentially ahead of that. He's got a little bit of talk track on that.
Sure, and thank you, Troy, for that. So as we attend these different investor conferences, and some of the smartest people that you can find are at these Wall Street firm attended opportunities. We've really been able to show them and isolate where we're growing at and where are these additional revenue centers being created. So one, it's the four-arm monster that we were talking about before. Centralizing a lot of functionality at the CERC level has allowed the subsidiaries to focus on origination. When you're focusing on origination, that allows you to increase your sales. At the same time, while myself and team were working with each subsidiary, we're bringing in, quite frankly, sophisticated infrastructure that they didn't have before. So one thing that we would like to share that I'm gonna just jump up here real quick is this model, because we're pressed for time here. You know, CERC, what is it? For individuals and investors that aren't deep into the energy industry, we need to be able to tell our story quickly and then a storyline that encompasses what we're doing on a national landscape. So it's a nationwide alternative energy development firm. Uh, through our M&A strategies, we brought on 14 different brands. Each one of these brands are focusing on origination. And for the, you know, we've had a 40-state footprint right now. About 90% of our installations we outsource. Where we own the installer, we do it ourselves. This allows for scale. In the energy industry, we've learned that companies that are very growth driven have huge origination centers, but they don't have the infrastructure to support it to get the jobs completed. So we've solved that solution through our national network of installation partners. We source the material. One place right there, procurement is a huge revenue center for companies that are structured like us. We've centralized our buying power. Before we were buying as 14 different companies, and you know, there's volume, there's price discounts at volume. So we brought ourselves to the $125 million buying capacity that we have, literally, and we've done the numbers on this. We're going to see 10% margins there. You know, Walmart buys a lot cheaper than a mom and pop shop. This affords us to get at the C levels with all of our material suppliers, and they are working phenomenal, what's called a SPA with us, right? Just deals for volume. The finance division that we've centralized. This is where we structure all of our contracts. Again, with our cost of capital to lend out to the public landscape. Before, we were working as 14 different companies, and you just don't get the buying power that you have with the capital, you know, with the capital side. When we brought that together, literally we're seeing 6% margins already, another revenue center. So these amalgamating all of our buying capabilities has brought on where we're seeing 6% at the finance level, 10% at procurement, significant numbers. And this allows being, you know, what we've seen in the markets and with our new board of directors that are been deep in the space, the market share versus revenue companies that get the highest ratios there, right? Where do we get our biggest multiplier? It's origination and lending companies. So we were 100% an origination company. So, you know, what component are we working on now? And pardon me for jumping around here, but I know we have limited time. Opportunities. You know, right now, as we speak, we're finishing the capital stack to roll out our national PPA commercial funding platform. Space, we are the capital. We own the paper, 25-year notes with considered A paper because the default rates on energy notes is less than 1%. It's phenomenal opportunity zones right here. So maybe you want to jump into some of the other things that we're working on.
In addition to this, what we're unleashing is some synergy across our major shared services centers. What we've noticed in the last 90 days is that there's amazing traction between the significant size team at USA Solar Networks and the significant size team at Balance Authority. These two subsidiaries comprise our services organizations. And so what it's allowing us to do is force multiply through division of labor. And so as we put together central financing division, a central procurement division with division heads, and bring together resources internally to structure capital, both for our commercial projects and our residential projects, for all of our subsidiaries. It's allowing us to take our revenue generating teams and let them have more time focus on driving and growing revenue. You see this resulting in our poultry farm initiative. and many of our shareholders are aware of this. We had one opportunity turns into an entire pipeline growth model for us. You see this with our off-grid, green energy projects we're bringing into the commercial agriculture space. So what we're seeing, you see it the same thing with our business to government opportunities in our electric vehicle charging space as we begin to work on an opportunity where we're fulfilling EV charging stations for a large nationwide hotel firm. They have many other brands. So what is materializing is centralized shared services, not just from an accounting perspective, but from a capital and internal finance perspective, from a materials procurement perspective. It's unleashing our business development strategic alliances that many of our subsidiaries have had, USA Solar, Balance, Future Home Power, with lending partners, manufacturers, and material suppliers. ABC to name one. They're one of the largest material suppliers in the nation. Many are familiar with Kathy Hendricks, is one of the most well-known, and her family, one of the most well-known female entrepreneurs, CEOs in the nation. We have very strong relationships there. Bringing together our divisions into centralizations, allowing us to divide the labor into central departments in our organization, which frees up our revenue generating teams to sell more and increase revenue. It's also materializing into significant growth across all business sectors. Our business to government sector, our business to agriculture sector, our business to business sector, and our business to consumer sector. Last year, if you were to have this interview with SIRC on December 17th of 2020, none of these opportunities existed in this fashion. That is an enormous leap forward on where we're at. I was speaking with a shareholder last evening and forecasting where we're going to be 12 months from now. I'm going to lead into some reporting, Pablo, and let Pablo follow through, and we'll hit a few other slides. We have $200 million of sales that are going to carry over from our current fiscal year 2022, which ends on 2/28 of 22, into fiscal year 2023. We are going to announce some exciting stuff here in just a second. This is going to be the first time it's been announced to our shareholders, many of which are very excited about our upcoming uplist to OTCQB, which is already filed. Pablo and I spent the early parts of this week auditing and working through the PIF forms for all of our board of directors and officers, which means that uplist is just coming out the back end. So we've got some exciting things that are on the tailwinds of that Pablo's going to share with our shareholders.
Thank you for that, Troy. So once that occurs, and it's right around the corner, as Troy was saying, we're not going to stop. We're moving straight into our audit, and our goal is to file we're changing our strategic calendar year. So it's going to end December 31st, start the new year. That'll save us 2 months in uplisting to QX. So our goal again is by March of 2022, finish our audit, uplist at QX, and be full reporting. As everybody knows, that opens up a whole new world of possibilities and capabilities and capital for us. So again, this is very exciting, and now that we have all of our executive team in place, our infrastructure nodes running at full blast, and they can only get better. They will only get better. Our goal is to file our March 2022 year-end audited financials to uplist to QX, and we will be a fully reporting company. One other exciting component that we're going to turn back on is our accretive acquisitions. And these accretive acquisitions are going to follow a global mission and plan to be a national alternative energy development firm. We manage the origination. We manage the material suppliers. We are the capital, and we oversee through a construction firm called Ownership Management all of our installation teams on a nationwide basis. Our scale capacity being, we have 532 W2 employees under CERC. We have the bandwidth to keep scaling now. through our consolidation period, we built a ton of infrastructure, and then we drill. We drill like the NFL team, right? When you get to the publicly traded markets, this is the elite, and we practice before we go to the marketplace. So, it's trial and error. We've learned what we need to learn, and we're ready to scale, bring on accretive acquisitions that are just going to add to our global footprint and our structure. Some of those, if I could share just one of them, just as an example, SVG, and I'll be real quick. SVG, they're a national educational platform for 5,000 contractors. The level of capacity that they have to spread our message is, I mean, it's going to be another game-changing acquisition for us. They have 200 sales organizations in their platform now. We've been working on this acquisition for 3 months. They're in due diligence, and we expect to close in January. As soon as we do, our sales organizations grow from 196 to 396. That very same moment. Right now, we're running expos in Florida, and the next month in Texas to transition roofing contractors to solar. Got a phenomenal program. It's very dynamic, and it's getting huge reception. Last night, we were with 100 different roofers, literally 100 roofing companies that wanted to move into the solar space. So scale, infrastructure building, methodical growth, and strategically also, just so everybody knows, these acquisitions will be in cash, not shares. With Arbiter Bank, where is he at?
We're trying to attend to some of the comments that our shareholders are putting in the chat and address them. So, as Pablo drilled down in here to the Arbiter Bank, keep in mind, these acquisitions are acquisitions with runway. Balance and Storm Ventures Group have been in close strategic partnership for almost 8 years. There is amazing synergy between these organizations. SVG has 30 plus W-2s. Our teams have been working together. What you're seeing is we have been working with them across these 90 days, not just on the M&A, but already making sure that we're driving revenue into each other's business models so we can come through the acquisition and integration window. And Pablo's going to talk about how much more organized our due diligence and onboarding is with these new accretive acquisitions in a second. But it allows us to turn on that revenue faucet from that accretive value into exponential impact that it has on all of our organizations much more quickly than we've been able to do in the past. And we've shifted our acquisition model that Pablo's going to get into from being heavily focused on shares and dilutive to being more focused on cash only acquisitions.
Yes, and just relative to the acquisition and onboarding structure, one of the first things that myself and Troy started building was an acquisition. When that capacity created itself again, a structured acquisition model, timeline driven, with partners at Eide Bailly that do phenomenal due diligence, structured acquisitions, 4 times EBITDA. We're not moving away from 4 times reviewed EBITDA. We can never lose in that scenario. So, we research, we do an analysis of the executive team as to who we want to acquire and what and how we're going to use them. There's thought process and team planning that goes into this equation. On our onboarding process, we've created a technology-driven 30-day life cycle. It's again through our HR departments, global or centralized HR, centralized IT, centralized treasury. They get onboarded in a strategic manner that allows them to move into the organization and scale quickly. So you're not going to see acquisitions that have not been analyzed, that are not structured in the way that are palatable and profitable for CERC. Everything is going to be methodically maneuvered. And when we say that we're doing cash acquisitions, our new institutional partner and investor, they're going all in with us. We spoke to the CEO at Arbiter Bank, pardon me, and he told us, hey, you're not going to get as much from banks, but we're 100% in on CERC, spend our money. I fell out of my chair literally and said, yes, we can. Yes, we can. Yes, we will. So they're going to be cash acquisitions. And That's cash is king. And this allows our capabilities to bring in some really dynamic partners. So we're really excited about 2022, as you can tell. I think we've
Excellent.
taken on that.
Excellent. Yeah, yeah. I did see people were asking if you could share this slide deck after the fact.
We'll be happy to. We're friends with many of our shareholders on here, so we get a little bit of an admin time when we're not hot on the call. We'll be happy to drop some of the screenshots of the slides into the chat.
Sure, sure. All right. Well, I will come right back to you guys for a couple more follow-up questions. Let me just skip back to Parsh very quickly and then to Ricky because Parsh has to hop off any second here.
Yeah, well, thank you for allowing that here. So to follow up with what you were asking earlier about what the coming year holds for us, the most fundamental item I wanted to go ahead and reiterate again is to hone in our manufacturing for vehicles so we can supply them quicker, but it's also to go and make sure that the Botway software gets the audience that it needs in terms of being a successful piece of software. We've been in some private comparisons. We have been compared to some of the larger AMRs that exist out there, and people are saying this particular piece of software is flexible, has a pretty good path management, a little bit of natural guidance management, quite a bit of ERP system related work because it has a triggering mechanism and orchestration level. And so, we're really excited about the Botway software. Essentially, one of the remarks that was made by an integrator, we had hosting some integrators, and they ended up saying, "Boy, this is a diamond in the rough. It's a really gem in the rough. Once people begin to see it, it's going to be compared to some of the larger manufacturers out there." But that's the optimism, in our product line. And of course, vehicles are vehicles, but to go ahead and get them to play together and in a heterogeneous manner with other vehicles as well and other traffic, that's going to be a plus for us. That's all I want.
Of course, yeah. I mean, it's impressive enough just to build the robot, but then to actually make it do things and integrate with each other in the cluster, way more exciting.
Yep, it is. And once we can live show this thing, that's going to be pretty interesting for us. Thanks a lot for the space.
Absolutely. All right. Have a good one, Parsh.
Yep, thanks.
All right. All right. And now I'm going to move back on to Ricky. I believe his mic issue has been settled.
Can you hear me?
Correct. Yep. I hear you. Perfect. Loud and clear.
Great.
So perfect. Ricky Sittimer from Starjets International. So just how do you feel about the past year of business?
Well, thanks for having me with all these great companies. I appreciate the time. This year we had an amazing year. I mean, last year we did 9.6 million in revenue. We're on pace this year to finish at about 12 million. We'll be up 25% for the year. We're very enthusiastic for next year. I've mentioned before on these podcasts that our audit for 19 and 20 are done. Our S1, there's a lot of questions. When is the S1 going to be done? The S1 is an ongoing thing, and you're dealing with lawyers and auditors, et cetera, and bankers. And we expect it to be done sometime next week and filed with FINRA. And we're expecting to uplist onto NASDAQ sometime in January. So we're very enthusiastic about that. With the uplist, we're expecting to raise $20 million. That'll be basically our first round. And then within 3 months after that, we'll be looking to raise another 80 to 100 million on top of that. And all of these monies will be used for acquisitions within the space of private aviation. Private aviation is growing tremendously right now. The demand is through the roof with COVID and all the variants, and the lines at the airport. People want to fly private jets, and the private jet industry is anticipated in the next 5 years to go from $20 billion to $100 billion. So there's plenty of room for us to grow and take the ride in the space. And we anticipate. I heard one of your companies just say that a year ago, if you thought we'd get to 100 million, you wouldn't believe us. I'm on the same target as that, and hopefully next year, as we sit here, I could say I'm doing 100 million plus in revenue based on acquisitions that we anticipate for next year.
Excellent. Yeah, I mean, that's good overall. So what about anything that you want to improve for the coming year over next year, or just anything you would have done differently? Just any improvements you see?
What I'd like to improve is my stock price. It got pounded again today. Unfortunately for me, it's not something that I can control. I'm doing everything that I said I'm going to do and more. I'm raising the money. There's potential acquisitions on the table. We will be trading on NASDAQ, by January, February. My revenue is excellent. The demand is tremendous. And as far as everything I said I'm going to be doing, I'm doing it, if not more. So, I wish that the shareholders can hang on and see through the trees and fight the non-believers at this point, because we know they're out there and they were believers and now they're non-believers. But I am doing exactly what I say I'm going to do. I'm probably doing more. There's only so much I can say on these chats, but I can tell you that the balls are in motion. Everything is rolling, and I expect to have a absolutely tremendous 2022.
Yeah, excellent. Yeah, I mean, I know you're very transparent about everything going on. Um, you have a ton of deals on the table. You're always in talks, so just good things going on. Do you have any big plans that you'd like to share with us, or anything else coming up for next year?
I mean, the big plan is to, get on NASDAQ, and, build a company that's doing 300 to 500 million with a tech platform that is a booking engine like Expedia and Travelocity of private jets, and have worldwide usage on demand for access to 15,000 aircraft. I mean, that's really what the goal is. And, the quicker we get the deal done on NASDAQ and raise the money, the quicker we can use that money for marketing on television, social media, and online, and get the ball rolling and get the revenue generating.
Absolutely, yeah. Um, did you have anything else you want to add to wrap up, or?
I'm just looking forward to a fantastic year in 2022. Wish everybody a happy and healthy new year. And it's going to be a great, great year.
All right, yeah, excellent. Yeah, I'm thrilled we were able to get past your microphone issue. It's great hearing from you as always. I still have not tried your app. I gotta load it up. I want to take a look at it.
Let's go. Book away.
Yeah.
How you doing?
I don't know if I'll book away, but I will definitely take a look at it.
St. Bart's is very popular.
Yeah. All right.
Everyone's going to St. Bart's.
All right. That's Ricky Sinimer from Star Jets, everyone. All right. Christopher, are you still there? I don't want you to
Yes,
think I'm
sir.
ignoring you.
No, this is great. Can you hear me?
Yes. Yep. I hear
It's
you.
wonderful. What an impressive group of presenters you have. This is great. It's exciting to hear all these opportunities for investors. This is wonderful.
Yeah. Yeah. I
Yeah.
just wanted to give you a chance to go again. Do you have any big plans you want to share with us? Any sneak peeks? Any type of little thing you want to throw out there?
Well, no, not there's nothing. It's one thing that seems to be resonating with all the presenters is we're all very transparent. We're kind of out there already, and you do that if you want to build investor trust, right? So I can see why everybody out here is successful and growing, and this is a great group. But look, with our company, Auto Parts for Less and for Less, we're a technology company. We have a huge space, right? The auto parts industry is $1 trillion globally, and right now, no one is serving that as a vertical until we came along with Auto Parts for Less. So opportunity is huge, and the challenges is equally as huge. But we're executing, and I'm extremely bullish. And just like Ricky, we plan on being uplisted here in the near future. You'll see all of our filings coming out. One thing I think that differentiates me, and not to target anybody in this group, but in general, when you look at our share structure and what we have for investors, there's nobody that can match my paper, right? 3.5 million total in the float. That's 3.5 million shares, not billions authorized, right? 3.5 million shares authorized in the float. 15 million total authorized shares. We have no dilution, zero dilution. We've consolidated all of our dilutors. They're all on hold because they're looking for a better opportunity on a big board. So anybody wants to come on board and invest in for less, we are 100% aligned in our goals. And we're not riding the backs of shareholders. We're going to the NASDAQ. We're all going to party. So come along, check us out. We're executing, kicking ass. We don't have overhead like we're not a manufacturer. We're a technology company. So we're building this on a shoestring budget, and it's coming together beautifully. Autopartsforless.com is launched. We did it on time. Started the code in January, launched August 26th. We're no longer in beta. Sellers are on. We have 65 sellers, hundreds of thousands of parts. We continue to execute. So short of begging, I mean, I don't know what to do. We get neon signs up, say invest in us, but when we trade maybe 5,000 shares a day or 10,000 shares a day, it's laughable. So we expect to be, we have to be careful how we provide guidance as we go through this process to uplist. But I think easily next year we'll hit somewhere between 30 million and 50 million, and really 10xing from there, because when you aggregate the largest sellers in the world of auto parts, these are huge companies. This is a revenue. These are massive revenue models. So well within 5 years, this is a multi-billion-dollar platform. So, and we know with NASDAQ, right, it gives us the firepower to get there. So want to thank everybody and opportunity to speak, and wish nothing but success to my co-presenters today. And thank you for your time.
Yeah, Ricky, can you still hear? Sorry.
Yeah.
Yeah, no, if you want to give us a little wrap up, that would be fine.
I didn't know if everybody was still on or not.
Yeah. We still got some people on here.
I just want to say that, I think it's going to be a great year. I'm looking forward to it. And I appreciate everybody tuning in today. And, I want the stock price to go up just like everybody else. And I want to see the sales go up and I want to see the earnings go up. And that's exactly what I'm going to work on.
All right, excellent. Always good to talk to you, Ricky. We will have another Q&A for you lined up as well, where you can, give us some more granular answers to some questions. But
Okay.
I
Happy
think that was good.
holidays, everybody.
Oh, happy holidays.
All right. Thanks.
All right, bye-bye.
Hey, Joseph.
Yes.
Hey, sorry about that. If you need me, I'm here.
Oh, okay, excellent. Hold on, let me just mute everybody else. Okay. All right, yeah, you're still here. I mean, did you have anything else to add, just to wrap up?
No. Thanks
Nope.
for everything. It was awesome.
All right,
It was great to hear from everybody. It's wonderful.
excellent. All right, yeah, we're all set then. I was just gonna open the chat to the investors so they can talk amongst themselves, basically. Management doesn't really have to hang around. This isn't gonna be live streamed. We'll try not to open it up public for everybody to chat, just because, it can get out of hand.
Understood.
We're back
All
in
right.
here, sir.
Oh, Troy's back in. Okay. Well, hold on. Let me record this. I'll add it onto the end, because I know Two Outed had a question that he really wanted to get answered. Let me just go up and get back to his question.